The S&P 500 has dropped about 9% in month of December last year and have regained about 7% in month of January. So where are we headed next? Let's look at the fundamentals and technicals to find out. If you watched my latest market outlook video, you know that I have expressed concern about US economy in 2019 and beyond. If you did not have a chance to check it out, I encourage you to watch the video to understand the latest market outlook. The S&P 500 has one of the worst December performance since the Great Depression. So what caused that major downturn? So you can't really pinpoint to one major source, but the biggest change happened in December was the Federal Reserve's decision on raising the interest rate. One of my favorite investors, the Stanley Druckenmiller, has warned us about the potential risk and downturn about the Fed decision on raising the interest rate. And he also warned the Federal Reserve before they made that decision and they increased it anyway, which caused major downturn in the market in December. Since then, the Federal Reserve came out in January, it published a statement that was more dovish on the interest rate decision, saying that they'll be more data-driven and be closely looking at the economic data and market for their decision on the interest rate, which has caused the January rally about 7%. So this shows you how powerful Federal Reserve influence is in the market. But it also begs the question on, is the Federal Reserve making impact on the market, or is market influencing the behavior and decision of the Federal Reserve? So looking at the first half of 2019, I'm closely looking at the Federal Reserve decision in March regarding their interest rate and their latest statements, as well as US government's ability to negotiate the bill to continue to fund the government. During the State of Union, Trump has expressed a strong opinion about the border control, the need of the wall, and committed to be funding the wall during his term, which raises a concern the ability for him to negotiate and come to a conclusion with the Congress and pass the bill to continue the government operation, avoiding the government shutdown and potential state of emergency. In later part of the State of Union, he expressed the importance of international agreement, highlighting NAFTA and the trade agreement in China. And he has announced that he'll be meeting with President Xi to finalize the agreement. And that raises a concern as well, his ability to come to a conclusion regarding the tariff and the trade agreement. So that is going to be played in the S&P 500. So keeping that in mind, let's look at the technicals. You're looking at S&P 500 on a daily time frame. I've drawn Fibonacci retracement from the lows of 2018 and the high, as well as Fibonacci time zone. The red line you're seeing is 200-day simple moving average. It's one of the important moving average that traders often look at, and it's important for us to evaluate as well and look at where the price action is relative to that moving average. And right now you're seeing that the S&P 500 is near that moving average, and right now they're struggling to break through it. From the October last year to December, we formulated this nice channel. So let me quickly draw that channel. In December, we broke out of the channel and went on a downturn, and this year we recover into the channel. So what are some of the options here? One of the options is that S&P 500 will break that 200-day moving average and go towards the top of the channel. And the second option is it will fail to break through the 200-day moving average and then retest the bottom and potentially break through and test the next Fibonacci retracement level. With the current condition, we're seeing more favorable of the downside, and then the top of the channel serving a nice stop loss position, and a nice take profit on a Fibonacci level around 2500. Let's summarize the trade. Based on the fundamentals and technical analysis of the S&P 500, we're seeing a favorable downside, with a potential trade position of shorting the S&P 500, with a stop loss at around 2810 and a take profit around 2530, giving you the risk and reward ratio of 3.5, with a time frame about 2 to 4 months. Remember, this is a TradeView and just an opinion, not a financial advice. Before you make a trade decision, make sure you do your own research and consult other professionals to find out what's best for you. I hope you enjoyed this video and let us learn, analyze, and invest.